Hi, everyone. In today's episode of IR Update, we are joined by Abhilash Paul, who is head of IR for DarGlobal, a luxury real estate company that listed in the London Stock Exchange in 2023. Thank you for joining us, Abhilash.
Pleasure is mine, George. Thank you for giving me this opportunity.
Great. So, Abhilash, could you quickly go through your background in capital markets? I think you went through Citibank and Deutsche Bank and kind of culminated into equity capital markets ahead of joining DarGlobal as the head of IR. And how did your skills and experience now? How did these help you navigate the listing and the post IPO environment?
Sure. Look, I had quite a varied experience across different parts of the investment bank at Citi and Deutsche Bank. I started my career and I joined Deutsche through their grad scheme in Singapore and was placed on their structured products trading desk within their fixed income business. Our team traded interest rates and credit derivative products, which in simple language means adding optionality and option value on top of more traditional instruments like bonds, loans, and credit default swaps. Our core business also included supporting corporate and institutional counterparts with their hedging requirements. So that was my first job out of undergrad, and it was a pretty steep learning curve and a great exposure to this kind of intense environment in the investment bank. More recently, at Citi in London, I spent most of my time in the ECM or Equity Capital Markets group with a focus on structured equity and equity-linked products, working for large corporates across the Europe, Middle East, and Africa region. Now, moving on from that experience and joining DarGlobal to set up the investor relations platform was a significant pivot from all of my prior experience. I was moving in-house, entirely focused on one business, compared to being an external advisor for businesses across sectors in all of my previous roles. It was really the drive and the growth ambitions, as well as the passion that Ziad, our CEO, displayed in our first meeting that really attracted me to this challenge. I have to admit, you haven't met him yet. If you ever meet him, he has this charisma or charm, which makes it quite hard to say no to him,
Okay.
And I couldn't. Look, in terms of translating my prior work experience into DarGlobal, my experience working with boards and senior management teams of publicly listed companies meant that I could hit the ground running when I joined DarGlobal, and I knew the key building blocks required to start the process of setting up the IR function at DarGlobal. Having an existing network in the UK market, where I've worked for the last almost 8 years, made it possible to get the right advisors quickly, get them on board so that we are best prepared to meet the requirements facing a publicly listed company on the London Stock Exchange.
Fantastic. Yeah, so very clear. And still on that listing in 2023, what stake of the company went into float again, and what challenges did this bring in terms of coverage and liquidity until other further funding rounds are considered?
The DarGlobal listing on the London Stock Exchange took place in the form of a direct listing in February of 2023, last year. So this direct listing was followed a private placement of shares to a selected and trusted investor community. Okay. We listed about 12% of our total share capital as free float on the exchange. Now, this is not unusual or uncommon on the London Stock Exchange, but on a relative measure is a lower float than what you would usually find if you compare the entire kind of all participants of the exchange together.
Very true.
I would say as a natural consequence of this and the broader market conditions that prevailed last year in 2023, especially in Q1, Q2, which included heightened uncertainty around the interest rate environments. We were in the middle of a hiking cycle, not only in the UK, but also in the US and other developed markets across the world. Yeah. All of that meant that risk aversion was top of mind for most investors.
Yeah, absolutely.
I would say that this was even more acutely felt in the real estate sector, given its sensitivity to rates. And also, it was also higher in the UK, as you know, given the kind of political uncertainty that was that we were all kind of going through last year, right? Now, all of the above affected us at DarGlobal in the form of reduced trading activity and resulted in lower liquidity in our share, lower than what we would have expected, right? Now, I think it's fair to assume that as some of these uncertainties, especially around rates, which, according to all experts and measures and forecasts, have peaked and are now potentially going to go lower as soon as in August in the UK. And also, some of the political uncertainty has gone away with the UK elections are now concluded. As these factors kind of reduce or fade away, confidence will return to our sector and the broader market. And that should result in more normalized trading activity in our shares as well going forward.
Okay. And in terms of, the learning experience, do you feel that the stock exchange, advisors, brokers, could they have done anything differently? Or, what are your thoughts on how the IR program might have been run differently now that the company has been trading for this last 12 months?
So George, I'd say hindsight is always 2020, right? And I believe there's always room for improvement in all processes. That said, I think all parties involved in our listing process, including our colleagues internally, as well as our external advisors, all our external advisors did a fantastic job in getting us over the line in record time. I can tell you for a fact that there was a lot of skepticism when we first announced plans to list and, had a target deadline or a timeline to make that listing happen. I mean, there were a lot of people who told us this is not the right time, definitely not the right time for the real estate market. There is no appetite. And there's so many kind of moving variables in the market that, achieving this goal in this stated timeline would be almost impossible. That's why I say that, it was a remarkable achievement for all parties involved. So looking back to 2023, I think we did quite well in the context of a difficult market environment to get attention from investors, get them to follow our story, and to also get them to provide genuine and actionable feedback. I mean, this was a time when there was, continuous outflows from most of the funds in the UK market, and specifically from, real estate funds in the UK market. I spoke to many of our peers, some in the FTSE 100, others in the FTSE 250, who could not get meetings with investors. I mean, they are multi-billion market cap businesses and been around for like decades, and they were struggling to get attention. In that broader context, I think we did quite well to get the meetings that we did, to speak to the number of people that we did, and get them to start following us. Now, 1 year on from the listings, our priorities are changed and slightly different, right? We have a full set of numbers now available online after our full year numbers are published in March this year. There is a lot more concrete material to talk about and discuss when we meet investors. We are very focused on continuing to build our track record and on executing on the promises that we've made to our clients to deliver top quality product and deliver it on time. So last year was about starting the business, creating that track record, launching those projects, launching those brand partnerships. We continue to do that this year. The most recent partnership we announced was with Aston Martin. In the last month, we've announced 2 new projects, one in Saudi and one in the UAE. But at the same time, we are laser focused on execution as well, because we have launched and pre-sold a significant amount of product over the last 18 months. We really need to deliver on the commitment that we've made to our customers.
Right. And you mentioned that the company enjoyed, a great, spike in results across the board in 2023, with a recognition of revenue from some major projects and with healthy margins, starting to kick in. What are the prospects and catalysts for growth for DarGlobal going forward?
As I said, our focus remains on continuing to grow our business and our footprint globally. Our CEO has publicly spoken about our plans to enter the US market, specifically in the New York and Miami region, and grow our portfolio in London and Europe, right? And we want to do this while staying the course with the execution plans that we laid out for our current projects in the GCC region.
Have these catalysts, these major projects, have they seen any changes? I mean, there is the US now that you mentioned. Do you have any expansion plans for different geographies apart from here and the US?
Yeah, look, our plans remain largely in line with those announced at the time of the listing. We had spoken about growing in London and Spain, as well as in other prime target market locations where our client base is actively looking to build and expand their investment portfolio. Now, that said, and as a result of that, we kind of are launching projects in the upcoming months in the regions that I mentioned. But given our expanding geographical footprint, we remain constantly vigilant with a keen eye on the market conditions across the regions in which we are present and those that we are not present in as well. We also spend a lot of time listening to customer feedback and to understanding what our clients are looking for and where they want to go next. Now, what we saw in 2023 and continue to observe in 2024 is a growing interest and curiosity in the Saudi real estate market. I mean, you have seen the public ambitions of the government there through their Vision 2030 plan to diversify the local economy away from natural resources and fossil fuels, as well as the tremendous investment that is being made across industries to bring global innovation to Saudi Arabia. The Saudi government has also announced a range of incentives to encourage foreign investment into domestic real estate. Now, DarGlobal is perfectly placed to facilitate this investment, which we believe will come through in the next years and hopefully decades thereafter. Through the extensive experience and the local network of our parent company, who have been in the real estate business in Saudi for over 3 decades, as well as our management team, and our understanding of the needs of the international investor, we are best placed to bring the right product to the market. All this led to our entry into the Saudi real estate market, right, which we announced in November of last year and followed up with announcing our first project in Jeddah, which was announced in the last month. So that entry into Saudi, I would say, is somewhat different from what we had mentioned at the time of the listing. But other than that, all the other kind of projects and geographies that we are talking about are all remain in line with what we told in the investor market at the time of listing.
Thanks. You previously mentioned some, macroeconomic environment. The interest rates were not favorable last year during the IPO. Speaking of the luxury themed, real estate sector, do you feel that the business model is in any way shielded from, or somewhat, uncorrelated to these, macro factors?
I mean, I would say that looking at it today, some of these macroeconomic challenges are lower today than they were last year. Some of these uncertainties still remain, but they are, you can call it, a bit less uncertain. There are still, I mean, that said, there are still quite a few challenges facing the market more broadly, right? Like uncertainties still remain around the path of the interest rates, around the path that the interest rates will take in the coming quarters and years. People say they have peaked, but how long will they take to go down? How far down will they go? We also have the most important kind of US presidential elections in November this year. And we also have wars continuing on 2 fronts, right? Now, in that broader context, when looking at our business, typically our clients are less sensitive to volatility in interest rates, and as a result are able to take a longer term view on the business side, right? So what we are focused on and our continued geographical expansion means that we are more diversified in that sense. We are more diversified away from pockets of, call it turmoil or issues in different parts of the world, because we are more spread out now. And Separately, what we are very focused on is de-risking our inventory profile. So we sell pretty much all of our units off plan, and beyond a certain threshold, we only start constructing projects and units once a certain proportion is sold, so that we are able to use the proceeds from the sale to then commit to the construction progress, right? So in that sense, we have a capital light business model where we don't deploy a significant amount of capital from our side, but instead use the capital that comes from sales towards construction, right? And the other point I would like to mention is, despite the challenges and uncertainties in the macro environment, one theme that is secular and that has gone through is the kind of growing number of high net worth and ultra high net worth individuals and family offices in the world globally. That number continues to grow. We only saw a slight dip in 2022, but it has come back to growth in 2023, and we expect that to go forward into the coming years as well. And as a result of that, and to add on top of that, is the kind of whole migration of millionaires concept, right? Like, there's been a recent study from Henley and Partners which said that the number of millionaires that migrate from one region, one country to another has been growing at a steady rate over the last 15 years, and it's expected to continue, right? So what that means is demand for our product, which is specifically targeted to this clientele, will continue to grow, right? As long as we make the right decisions in terms of the type of product we produce and the locations we produce them in.
That sounds very compelling for investors. And how does the communication with investors happen these days, in terms of frequency, tools, technologies that you use?
Look, we aim to keep those people and investors who are following our company quite well informed. On the financial results side, we typically announce interim results at the half-year point, and then full year results following the full year end, right? And alongside that, we make all regulatory announcements and disclosures through the RNS system in the UK, which is then picked up across the market as usual. Now, separately, we announce kind of new projects and brand partnerships through press releases on our website, and distribute them through PR newswires and other kind of PR agencies, and then are extremely active actually across all of our social media platforms. I mean, as a customer-facing organization, you kind of have to do that these days. And if you look through our platforms, you'll see that we are regularly updating our customers, investors, and other followers on what's happening in the company.
Yes, fantastic. And could you give us some quick outlook of what the rest of the year looks like, and early next year, early 2025? Now that the annual earnings season and the AGM season are done.
Sure. Look, I mean, right now, at least my main priority is our upcoming interim half-year results. We just finished our half-year end of June, and everyone kind of internally is focused on putting the right material together and putting the right disclosures and information out. We expect to publish all our interim results in the second half of September. That's our key focus. And at the same time, as I said, like, we have a whole branch of the company that's focused on execution and construction and continuing that part of the business. In the remaining part of the year, we will. I mentioned this briefly. Our CEO talked about our expansion plans into new geographies. I think you'll hear more about that going forward. And look, on the investor relations point, I think we just need to take that next step in terms of engagement with investors and visibility with a more kind of diversified set of capital investors. So I have a plan in place, and with the help of advisors like yourself and others who've got loads of experience in the market, I'm sure we'll get to the destination that we want to get to.
Fantastic. Well, thank you so much for joining us and for the fantastic insights. Abhilash, it was a pleasure to have you here with us, and take care.
Thank you very much, George. I mean, the pleasure was mine, really. It was a great conversation. I really appreciate it and enjoyed it. Thank you very much.